Hello, this is Japanese Economic Review Channel. Welcome everyone. Today, we'll explore Japan's labor market using the February 2026 preliminary data. We stand at a crucial inflection point. Recent data highlights bright signs for structural challenges alongside emerging dilemmas. Let's dive into the macro trends. 3 core drivers shape the 2026 landscape. First, real purchasing power is recovering as nominal wages rose 3.3%, decisively surpassing inflation. Second, the part-time bottleneck has emerged as workers restrict hours despite a 4.2% hourly wage hike. Third, we see a structural shift toward high-value output in fewer hours. Look at this crossover. Nominal cash earnings grew by a robust 3.3% year-over-year to 298,341 yen. Meanwhile, the consumer price index grew by only 1.4%. This results in a 1.9% increase in real wages. For the first time in recent cycles, baseline pay increases have outpaced the cost of living, restoring consumer buying power. What's driving this wage boom? Scheduled base pay grew by 3.3%. However, the real catalyst is variable compensation. Special payments surged by 7.1%, with 2025 year-end bonuses averaging 424,889 yen, a 2.8% increase. Corporations are aggressively using bonuses to secure talent without permanently inflating fixed base costs. However, a severe market divergence is occurring. Full-time workers saw a 3.9% total cash earnings increase. In stark contrast, part-time workers' total earnings rose by only 1.4%, while their hourly wage spiked by 4.2% to 1,443 yen. Their total hours worked dropped by 2.6%. High hourly costs aren't translating to high total income. This paradox is caused by the tax and social security wall. As hourly rates rise, part-time workers are forced to actively suppress their working hours to remain under tax exemption ceilings. Employers are paying more per hour but extracting less total labor, which artificially worsens the national labor shortage. Sector polarization is also expanding. Capital-intensive sectors lead the boom. Finance and insurance wages surged 15.9% to 573,695 yen. Conversely, traditional interpersonal sectors like dining services contracted by 2.3%. Industries unable to keep pace with the rising cost of human capital are being left behind. We are witnessing a historic decoupling. While regular employment grew 1.3%, total hours worked fell 0.9% to 129.6 hours, and overtime dropped 1.0%. Japan is no longer relying on exhaustive overtime. The economy is successfully mutating into a high-wage, high-productivity structure, making time the ultimate premium commodity. To navigate 2026, we must take 3 actions. First, leverage variable compensation to retain full-time talent. Second, redesign workflows to require fewer absolute hours from part-time staff, rather than just raising wages. Finally, capitalize on time scarcity by accelerating automation and AI integration to maintain output. Thank you for watching the Old Japanese Fairy Tales channel. We look forward to having you with us again,